We translate global chaos into instructions for capital.
Hello dear clients of the company, hello dear viewers of the Era of Change Analytical Agency. Today is Friday, which means it's time for an analytical breakdown. We'll talk today about the non-ferrous metals market. Because a very interesting event is brewing there, I can't call it anything other than the collapse of Bretton Woods. And there literally only a few days are left, and you absolutely need to know all this before doing anything.
Our weekly trading results. Join for free, subscribe, and get early access to forecasts.
So on the Shanghai Exchange, starting from July 24th, 2026, the wise Chinese government is banning leverage. And for individuals, so what is that? It's margin trading. And on metals, I'll say right away, gold, silver, and a number of others. And it's canceling, let's say, for individuals altogether, this whole game with funds and stocks and so on, that trade without being tied to physical metal. What is going on? Good heavens. So first of all, many don't understand why this is necessary. I'll explain now. If we speak in dry economic terms, they are effectively grounding the price of metals, tying it to physical assets. That is, all these ETFs they have will trade one-to-one with what they have in storage. It's no coincidence that in Hong Kong, storage for physical metals was increased tenfold. It's no coincidence that central banks are buying up gold like crazy. They continue to do so. Only some countries with serious economic problems like Turkey were selling recently. But all the others, the buy button is just held down in real time. And this 30% correction that happened, even more than that, since, yes, that peak in gold and 50% in silver, it actually only fuels this momentum. What does all of this actually mean? What kind of event is this that I've just presented to you, so to speak, for discussion? My dear friends, Bretton Woods is finished. I'll remind you what the Jamaica system is, what the Bretton Woods system is. Yes, when the Americans came and said, this one piece of paper of ours equals one of these, roughly speaking, an ounce of this gold, let's say. And a lot of time has passed since then. The Americans have printed such a quantity of these papers, and all sorts of funds, ETFs and so on, have printed such a vast amount of paper gold and silver that the Chinese, looking at this, said, you know, we figured it out, you've cheated us all. There's nothing inside, nothing backing those pieces of paper, give us our gold. We're buying it with your debts. How did they put it? They just went ahead and sold off American debt to a large extent, and they're continuing to do so. And with these, instead of that debt, with those cheap dollars, they're buying gold and moving it into their own vaults, launching their own infrastructure products, ETFs, and the sale of physical ounces of gold and silver, for instance, as well, on their own exchange. And here's what that means. At the very next turn, they'll come out and say, and now sales through our exchange are one-to-one, and it'll be backed by the yuan, not the dollar. Do you see where this is going? We don't need dollars for settlements at all. You can trade on our exchange, which is pegged to gold. We have all of it physically stored, and you can trade quite freely. In yuan on our exchange without leaving, but in gold. This is the pegging of the yuan to gold. This is the pegging of the New World financial order to physical assets, stripped of leverage, the so-called margin. And the next thing you'll see is an exponential rise in metal prices. Will it be right after the 24th? No, that doesn't mean anything. It doesn't change our forecasts. We're expecting a deflationary shock caused by the crisis, a rise in the DXY index, everything remains the same, watch previous programs. After this, let me clarify why I'm saying all this right now. It's because after they do this now, even though gold might drop to 1800, it might not fall any lower than that. I've started to have doubts, because if something like this happens, it will mean only one thing, that physical metal will become, this price will become the foundation, after which we'll see growth.
Check out our regular reports in the Realized Forecast section on the Era of Change website.
At first, we might still see a sharp spike, whether you'll have time to run and buy that gold or not, even up to 2500, as I said. I've no doubt this could happen in the moment during a massive panic, but considering that this, let's say, law, regulation and so on has been passed, it's all already built in. I don't know what will happen at that exact moment on the American exchanges because the outflow will be completely obvious and clear because many ETFs that are currently trading in the US and so on. And there are only a few ETFs. I'll talk about them today in our private episode on our website. I'll show you which ones you can buy that are actually physically tied to the metal. And they're not American, I'll tell you right now. Yes, you can buy them for dollars and it's one-to-one there. So if you buy it, it means this ETF goes and buys gold in the vault immediately. And there, it's physically, let's say, guaranteed by the state. So they do exist. You don't have to run for physical gold. But nevertheless, what's generally out there, like SLV and GLD, they won't work for this. They won't work, there's leverage built in, and they're completely paper-based. Well, for the most part. So a very interesting event is coming, my friends. This collapse of Bretton Woods, I'll call it that. And then the most interesting thing to say here is that the Americans, they're not idiots either, despite the fact that one of the presidents, the current one, is trying to explain exactly that we're idiots and will go for any junk. In reality, they're not idiots, even though they try to seem like they are. For the celebration of America's 250th anniversary, rumors started that they will revalue the cost of gold on their balance sheet, which is a significant financial move. I'll remind you, as a point of reference, their current troy ounce is valued at, according to the latest available figures, way back in the 1960s, meaning they haven't done a revaluation. And it's there, I think, somewhere around $40 an ounce or something like that, maybe just about that price. I'm afraid I might get the number wrong. To be honest, I haven't even looked into this economic history that much. I just remember it's dozens of times lower than it is now. And if they suddenly see that China is diligently trying to pull the blanket to its side now and attract capital, they might say, so that everyone doesn't suddenly run there, taking real gold and moving it effectively into the Yuan, they could do the following, say that. And now our debt is also denominated in gold. Because they can't pay back the money, that's a fact, they're bankrupt. They could do what they've already stated very indirectly, open 50-year long bonds. That is, say that we owed you in 10-year bonds and 20-year ones. Yes. For example, the 20 years treasury funds. Yes, that one. The so-called TLT ticker. It trades in 20-year ones, right? On average. From 10 to 20 years, well, 20. And they could make it 50 and say that we'll pay you back sometime. Maybe much later on. But then, of course, in gold, if you will. And the peg is at this price. They can do this. And then what? Will it change the price of gold much? On one hand, yes. On the other, no. But if from both sides, China and America suddenly focus so much on gold, while central banks continue, as I said, to buy it like crazy, a truly amazing picture is unfolding before us. Look, first, everyone is dumping United States debt, including the Japanese, who have started doing so actively. Their yen is already at 162 to the dollar, breaking through its historical highs. Let me remind you, my forecast is over 175, I think, somewhere around there. Then they'll raise the rate so much that the Japanese will simply start pulling their money out of the American market, which, by the way, will crash it. And this will happen, apparently, as early as this autumn. Yes, my forecast will be fully realized that there will be a big crash this year, which is exactly what I'm trying to profit from, by continuing to hold a long put option on the American market with a far strike price. So at the moment, the most interesting thing is that if everyone starts shifting into assets from both sides, into tangible things, into physics, so to speak, physical metal, then we'll get a very interesting event that could instantly topple not just the American market, but also the markets of other countries. This could trigger a deflationary shock because it's a shift from one asset to another, realizing that something completely incomprehensible and bad has begun.
Visit the Era of Change website or app to subscribe using credit cards or cryptocurrency.
And at the same time, an exit from American assets and a high demand for the dollar. This sends the DXY index into outer space. How so? Well, for example, you hold JP Morgan shares which are denominated in dollars, and you realize that a global restructuring of the world's financial map has begun. What do? You sell those shares for what? For dollars. So you need dollars, and then you immediately move those dollars where? Take one guess. Not to mention that the ongoing imbalance between physical silver and gold versus paper continues to widen. This spread. And at some point it could become so surprisingly large that people will say, oh, why the hell do I need all your paper slips, gold funds, and so on, if I can hold it in my hands? let it all go to hell. Guess what happens if people start behaving exactly like they did just 6 months or a year ago when they sold their apartments to buy silver at $120 per ounce, right? And what did we have? What happened? Panic, shock, and a sharp sense of uncertainty. Now imagine for a moment that same feeling, but happening on a global scale, impacting people everywhere. That is why I am warning you about this event in advance, so you have enough time to prepare yourself and those around you. Again, this doesn't mean gold won't follow our downward forecast. It could take a very sharp dip, but will you be able to buy physical metal at that price? I'm starting to have some doubts considering these recent events. So, as I've said, I'm not selling my metal bought 3 or 4 years ago for now, and I'm waiting for this dip solely to go and buy more. Because I can't call what's going to happen in the next few years anything other than a financial apocalypse. The Americans could really mess things up for themselves if they do nothing, and they know it. They changed the head of the Fed, and he's quite the hawk. He will, of course, for now, keep the rate low, as I predicted. And our forecast, which is already 2 years old, good Lord, 2 years, that the Americans will bring the rate to 2.5. They're moving toward it step by step, holding, slowly lowering, holding, slowly lowering. They'll push inflation to double digits, meaning they'll drive dollar inflation up to, say, 10 to 15% annually. They'll see it leading to dollar devaluation and the loss of not just financial hegemony, but the stability of the US financial system. And then they'll hike the rate sharply. That's when gold will crash, of course. Why? Because central banks all over the world will start raising rates, and then we'll just have a big beta boom. Fiat currency will suddenly soar, bringing down the already grown crypto, gold, and everything else. By then, yes, crypto will have grown. And as I said before, don't think you'll be able to sell it. Regulation will be in place by then, like that Clarity Act they're signing and working on now. It's all part of it. It's ongoing. If you follow crypto industry news on our site, we publish specific information that is, let's say, very important for crypto enthusiasts or those involved. We write about projects being launched, joint ventures here and there, like Centrifuge launching tokenized assets and debt together with another player. It's happening there and here, and we're showing all of it.
For your convenience, we've introduced dark mode. Better eye comfort with just one click.
And people reading this draw conclusions about which companies are riding this wave. They'll make money for a while, but when it all recedes and rates start rising sharply, I'm afraid no tokenization will save them. They'll all just go down the drain. Bankruptcies will follow one after another by the dozens. These coins will blow up and vanish. A few will still remain available on the market, like Ethereum probably, but for all the others, it is going to be very grim. We have a whole section dedicated to this topic where we discuss it in more detail. As they say, on the website, you can open and see the results or the company's statement. Any self-respecting company, whether it's a trading or analytical one like ours, must report on its work. So when we show, look, we predicted an event and we profited from it. Whether you came to us or not, whether you brought, roughly speaking, some of the analytics or insights from us into your own home, or you did something entirely by yourself and then had to deal with the consequences, well, that's really up to you. And it's very important to say here that we are precisely selling confidence in the future. On the contrary, instead of fear, we show options for solving your questions and problems. Until next week, dear clients and viewers of our social networks.